Okay, so you're all welcome to today's section. This is the second day of our introduction to Forex trading. Yesterday's presentation was quite straightforward. I hope you all enjoyed it, and then you went to find one or two things that I talked about. Please, this is just the introduction. You can read more online and get more information on the kind of information I give you on this platform. So let's go forward. For today, we are going to look at forex trading sections, and we also look at certain things that forex traders have access to, or you would be meeting almost all the time. That's the base quotes, and then the quote currency. You look at what a pip is and what a pipette is. Then we look at spreads, look at lot size, leverage. Then you try to look at the trading platform that we talked about, how you get to know all of those things. It's quite straightforward. So let's go first to forex trading sessions. As I said yesterday in the presentation, the forex market is 24 hours for 5 days in a week. So this is a diagram to show how the forex market works. We have the countries around the world. We have 4 major countries that controls the stock exchange, or the exchange of currencies. We have first, from the right hand side, we have Tokyo, we have Sydney, then we have New York, then we have London. In this, the major countries that controls the volume, biggest volume, are the US and the UK because of Europe. So these people control the market the most. So when their time is up for trading, there is so much volume in the market. I'll explain what that means. So as the world is like a globe, so we know how our time works. There are time zones. As we have it here in Ghana now, it's almost 4:30 in Ghana. Around this time, it's about 4 a.m. in the other part of the world, somewhere around Sydney or Tokyo. They are in the early morning, or they are now waking up to certain things. I hope you understand that. So this is how it works. When Sydney, when it's around 6 or 7 a.m. or 8 a.m. for working time in Sydney, we will be asleep in Ghana because their time is different from us. But they will be open to the forex market. The forex market is open at that time because they have to also trade. So once they start the trading, Tokyo will also wake up to join the forex market. So the Tokyo Stock Exchange is also open around the time that they open. So this is the overlap. The part with this yellow line is where the two markets would intersect. So Tokyo and then Sydney, that's Australia, would have be in the same session. Both sessions are open and they are trading. So when that happens, there is a lot of volume in the market. In Ghana, around that time, it will be midnight. So this is the time. In Ghana, it will be around 1 a.m. in the morning when these people are in full session doing their trading activities. You understand? So up until like 8 a.m. in Ghana time. This times down here is in GMT. That's the general time. We have 0. We are in the Greenwich Meridian session, so we have almost the same time as London. So sometimes it's plus 1 hour, or sometimes it's minus 1 hour. So let's take that we are in the same time zone with London. Then as this Sydney closes around 6 a.m., Tokyo is still running. Tokyo is the green line, so Tokyo market is still open till like 8 a.m. in the morning. By 8 a.m. London session or London Stock Exchange have also opened, so London will open around 8 a.m. and they would also trade for almost 8 hours to 4 p.m. their time. That's where Ghana is almost on the same line with London or the United Kingdom. All the market of Europe is traded on the London Stock Exchange, so it has a very big market, and the volume or the amount of people who are trading or making transactions during the London session is very big. So you have so much movement on the forex market where you can make your money and all those things. Around 12 noon or 1 p.m. The New York people have also waken up, so their time for trading will start. At that time it will be around 8 a.m. in New York. But note, that time their 8 a.m. will be around 1 p.m. in Ghana here, so we will still have a taste of their trading period. So when these two periods overlap, London will not close until it's 4 p.m. Ghana time or London time. We are on the same time. That's the advantage we have as Ghanaian or West Africans. We can trade almost all the forex sections, and in the daytime, that's the good one. The most important sections or the most volatile is the London and the New York market, and almost throughout all the time you will have daylight and it will be our working time. So London will go till 4 p.m. then it closes, but whilst it closes, New York is still in session till around 9 p.m. our time, where it will close somewhere here. By the time it closes, Sydney is also about to open, but most of the time there is a small gap here. The market will close for about 1 hour. Around 8 p.m. the market will close, because this session has no volume, it's not that much, so companies would not allow people, or brokers will not allow people to trade around this time, so the market will tend to close a little bit. Then Sydney will start around 10 p.m. onwards. So this is the sessions, and you can take advantage of the sessions. This is the time frames we have, from Tokyo to Sydney to New York, then to London. Mostly it's London before New York, or it can be the other way around. It can be from this side, London, New York, from this side to this side on this chart. So London, New York, Sydney, Tokyo. It runs like this till Saturday or till Friday in the evening around 8 p.m. Then the market closes, and it will start on Sunday evening, because in the evening on Sunday in Ghana, it will be the market will be open. It will be time for the market to start at Tokyo. I hope you get me. The market will be open at Sydney here. When it's Sunday, let me give you the time. Sunday around 8 p.m. Yes, Sunday around 8 p.m. Sydney will open. That's Sunday in Ghana. But Sydney will already be in Monday, so the market is open. So you can start trading around that time till the next Friday, where the market closes for the weekend. That's how the forex market works, and that's how we say the forex market is 24/7 market. So during all those times you can trade. But when the market closes, all the trading apps are closed. You cannot modify your trade positions. You cannot change your buy or your sell. You cannot do anything. You have to wait till the market is open. That's that. Please, are we all okay on this, or do you have a question on this? Should I move on? You can give me a thumbs up if I should move on, then you go ahead. You can turn on your mic if you want to say something, or should I go ahead? Please only raise your hand when you want to ask a question. Yeah, Tete.
Okay, so if I'm getting you clearly, then you are teaching us how to take advantage of the trading times within different countries.
Yes, sir. Yes, please. So
Okay,
these are the
that's fine.
major times that we trade. So that's how you take advantage of it. For me as a trader, I only trade during London and New York because that's where I get most of my opportunities. During this session, we call this session Asian session. Sydney and Tokyo is Asian session. The market is very slow. The currencies that move that much is the Japanese yen and then other currencies in that area. I hope you understand it. So once we start, you get to know how to take advantage of the sessions. Are you okay?
Yeah,
Okay, okay. So let's continue.
right.
The next thing we will talk about on the slide is currency pairs. How we come about, or how you will be able to decode a currency pair. A pair has two main components. It's a pair, it means two things or two currencies together. You cannot trade only one currency. You have to have two different currencies to trade. It's always two. So in this case, we have this is the pound, the British pound. So the initial is Great British pound. That's GBP. You understand? GBP. That's Great Britain pound. Then this is the US dollar. That's the meaning of this. So the two are put together to give us the pair we talk about. So this is the Forex pair. So whenever you see these initials, the first one is the base currency. When we say a base currency, it is the currency which the quote is being quoted for, or is mostly the base currency is the main currency. Let's use Ghana cedis. Your base currency is USD, right? Then that's the base currency. When you want to look at the rate of the USD to the cedi, whenever you go there, you will see that you have around let me bring this GH. This will be quite slow. GHC. So this will be equal to let's say 15 cedis. 0.01 something. You understand? So this 15 cedis is not $15, it's 15 cedis. So it means the second currency is always the one that has been given the numbers. The second currency is always the one with the quote, with the numbers. That's why it's the quote currency. So you need $1.3 dollars to be able to get £1. That's the meaning. So the base, that's the main currency. This is always 1. Then the quote currency, you have the decimals or whatever figure you have to complement the base. I hope you understand. So we can have other currency pairs like Euro, USD. In this case, if they are put together like this, it means we can have mostly these days the euro is bigger, it's a little higher than the dollar. So you have 1.1 or 1.12. It means that you need $1.1 to buy 1 euro. I hope you understand. So these are the major forex pairs you can see. You have euro versus the US dollar. Then you have the British pound versus the US dollar. These are the initials. So you have US dollar versus the Swiss franc. then you have the US versus Japanese yen. These are put together. There can be a slash within them, or it can be, they say throughout it can be one word. So we can also have, we have these ones, the US dollar versus the Canadian dollar. Then we have the Australian dollar versus the US dollar. Then we have the New Zealand dollar versus the US dollar. These are the biggest or the major forex pairs that move very much in the forex market. You ask, why don't we have the Ghana cedi versus the US dollar? The rate of movement in the pairs, or the small tiny movement in the numbers on the pairs on the Ghana cedi is not that big, or it doesn't move that fast for us to get our trading. But with GBP USD, you can see that these decimals can move so much, or can move severally in a day. That's where our trading lies in. We base on this decimal movement to make our profit. The Ghana cedi or the other currencies do not have that fast movement in the decimals or the fractions, so we don't consider them as major currency pairs. These are the most traded currency pairs we have around. Notwithstanding, we also have other pairs like the US dollar against other commodities. We have silver, we have gold. So gold is, the initials for gold is XA. That's what I have here, XA USD. Before I proceed, let me show you, let me share this screen so that I can show you what other currencies look like on TradingView. I hope you were here when I mentioned TradingView the other time, or in our previous section. So let me share this so that you can get a clear understanding of what I'm talking about. Yes, this is TradingView. So when you come here, you can search for any other currency pair. This part of TradingView is where you have your currency pair. So we have XAU USD. We can search for other pairs, the ones we talked about. Please, can you see my screen? Yes, so we have forex pairs, we have stocks, we have funds. There are a lot of them. There are bonds and all those things. They all have their initials. So when the moment you type these initials here, this TradingView platform will give you the chart, or how the movement of the currency pair has been over a period of time, over a long period of time. This will show like this. It's unfortunate my chart is not loading, so pardon me. So this will show like this. So we can have the daily candle. So how in a matter of days, so several days ago, this is August 2023, from August 2023 to this time, this is the movement of this pair, the gold paired with the US dollar. This is the movement of it. I hope you get me. And this is the movement, the fraction. So from that period, gold has moved from $2,000, $380 to $415. This is a very huge margin. If I'm able to catch or predict this movement, I'll be a millionaire. But look at the difference. It's just in the decimals, right? You just see the movement in the decimals. This is where we take our trades and we make our profit. So that's a clear explanation of what all these or the currency pairs are. It was unfortunate that the whole chart did not open. I wanted to show you other currency pairs. So it could be you can go BP USD, and we could have seen the chart here. Don't worry, in our next meetings I'll show you the chart when my network is good enough to do that. We come back to the presentation, then that's it on the pairs. Please, I hope you get me right. You can do more search on the pairs again and you get it. Do someone have a question for me on the pairs? Should I go to the next item on the slide? Okay, there is no hand up, so it means we can go to the next item on the slide. Yes, now we are going to look at what a pip is and what a pipette is. As I was talking about the decimals in the prices, the quote prices, so we know that this is a base price for US Euro USD, and this is the quote price. So 1 euro is equal to this figure here, $1.0.88 cents and the likes. You understand? Now in forex trading, your wins are calculated based on the movement. So in stock exchange they say a tick, one ticker, just like the movement of the second hand, which moves the minute hand, which also moves the hour hand. In forex it's almost the same thing. When this is called pipette, so all the yellow indicators here, or the golden indicators here, are called pipettes. They are the smallest units of movement you can find, just like a second or a microsecond. Then you come to the next one that follows. So mostly is the 4 decimal place. The 4th decimal place is known as the pip. I hope you get me. So this is a pip and this is a pipette. Mostly we don't regard the pipette, but that is what would move for you to get the pips. Now if you have 9 pipettes, when the next pipette is added to it, you get 1 pip. I hope you understand. That's the movement. So most of the quotes, the 4th decimal place is what is a pip. This is a pip. So let's go through this together. If you have GBP USD and it's quoted like this, how many pips would this be? If this, how many pips would this be? Remember, the 2 is the pip, so we have 2 pips. If it's like 4, this is, if it was previously like 1, 2, 1.274 4. Okay, let me do something different. So we have, this is the main quote, right? And it has moved to 1.278. What's the difference in pip we have? It means the GBP USD has moved 6 pips. You understand? 6 pips. This is quite, so that's what it means. Let's do another calculation. So we have all these. So in the forex market, mostly is the movement of the fractions, and 1 pip can worth $1 or $10 based on the amount of money you wage on it. We'll talk about that. But when you come to gold, because the price of gold is very big, mostly this is the pipette, then this is the pips you have. So these are different. Then you have the Japanese yen. You know, the price of the Japanese yen has depreciated against the dollar to the extent that you have, before the decimals, you have about 3 figures. So this is where you have your pip. So this is regarded as your pip, and these are regarded as your pippets. As we go on, we will get to see more of these examples. Now let's look at this. Okay, before the next slide, okay, when I'm done, you have time to ask all your questions. So our next item will be a spread. What is a spread? Remember, when we were talking about currency trading, we talked about the fact that the people that sells the currency make their money based on the small fraction of difference. So you have the bid price, then the ask price. So when you are buying the currency, they will give you a higher price like this. But when you are going to sell your currency, they will buy it at this. The small fraction difference, like these 2 pips, is the spread. This is what the broker gets. This is where the broker gets their profit from. So they don't mind whatever you buy and the profit you make. They get their money from this. This is like a commission to the broker. So whenever you want to buy, they will give you the price of gold at the bigger number. Then they will get the small difference between the selling price and the buying price. That's the spread. So they will get 2 pips of profit. That's their profit based on the lot size you would use. I hope you get me. So if you are, this will be quite tricky, but as we go on, it will look a little clearer to you when you start working with your charts and you understand it. Please, are all of